South Korean finance minister speaking right now, saying that it's possible to achieve economic rebound in the third quarter. Give us, first of all, your reaction to these worse than expected numbers and your forecast to the optimism that we're seeing with the finance minister there. Is that possible?
Thank you. So today's number was indeed much worse than our expectation, even though we did expect a larger sequential contraction compared to first quarter. While private consumption improved Q-on-Q thanks to government's cash handout as well as tax reduction, which boosted retail sales. And we also think that the relaxation of social distancing things may have provided some support, but it seems like it's still not large enough to offset the weakness coming from exports, which were down double digits. But having said that, we do believe that Q2 should mark the trough of the current crisis. So high-frequency indicators have confirmed that domestic activities as well as export performance may have bottomed out. And that's why we feel that the policymakers will prefer to look through the weakness in Q2 and focus on reviving growth momentum in the second half.
And yet we continue to see indications that exports are again headed into another monthly contraction in the month of July, according to those 20-day trading numbers that we saw already. Is it at all possible for the South Korean economy to veer away from these exports and try to diversify its economy, given that the global demand may not rebound as fast as expected?
Our base case for export recovery is a moderate and uneven recovery path, but we do acknowledge things are not going to be a smooth ride. We expect a quicker than expected China recovery as well as resilience in semiconductors due to the structural demand coming from 5G rollout as well as the working from home or learning from home to provide support to export recovery. But things are not going to be a smooth sailing, right? So we do start to get concerns that memory chips contract prices may start to correct in the second half. And as you mentioned, the resurgent global COVID cases could potentially slow down the recovery in the second half. So yes, we still expect export to recover, but it will be a bumpy ride.
What do you expect then from the Bank of Korea?
On the monetary policy front, we are not expecting BOK to cut rate further, given the policy rate is already approaching the effective lower policy bound. And I think at the July policy meeting, Governor Lee made it clear that even if downside risks were to rise, they prefer to use unconventional policy tools rather than traditional policy rate cuts. And even though we don't think that the overheated property market concern will be a big policy priority at this moment, it does increase the bar for further easing, right? So as members may start to get worried about the negative side effects from extended period of low policy rate as well as abundant liquidity, which just keep inflating asset prices.
What are your expectations for a domestic recovery in terms of any kind of rebound we can see in confidence, retail sales?
So from the high-frequency indicators, we have started to see domestic activity show sustained improvement, and some activities related to domestic tourism even returned to January's level. So it's actually very encouraging. But what I would say is labor market will still continue to be a concern. So even though we started to see the number of job losses have come down, but the quality of job creation remains poor. So this could potentially be a drag.
Talking about uneven recoveries, we have seen some encouraging numbers when it comes to the jobless rate for the month of June. But how problematic is it that it looks like the bulk of those gains came from temporary employment?
Yes, indeed. So as I mentioned, the quality of the job creation still remains quite poor because a lot of the job addition is coming from temporary workers or government-related job creation. So it's not going to be very sustainable unless we see a broader base recovery.
We are, Angela, just getting breaking news from SK Hynix reporting operating profit for their second quarter that beat even the highest estimate out of analysts that we surveyed. The second quarter operating profit coming in at 1.95 trillion won. That is better than expectations, much better than expectations, actually. Second quarter net at 1.26 trillion won, as well as second quarter sales at 8.61 trillion won. That is up 33% year on year. Do you expect the momentum that we see in chip demand continue, even as the world eventually emerges from the work from home kind of theme that has fed into that demand?
We do think that the tech momentum should continue, even though we see some uneven recovery, even within tech products. But given that there are structural demand coming from 5G commercialization, we do think that semiconductor will be able to drive the export recovery into 2021.